Today is Sunday, the 28th of November 2021. On Friday, there was, as you can see there from the Irish Times report, 5 billion wiped off the value of 3 Irish companies over a new COVID strain. This is the so-called Omicron or whatever you call it. It's supposed to be coming from Africa. But you'll see there from the Irish Times that there has been a significant write-off of the prices of certain Irish shares, particularly ones that might be affected by the restrictions in terms of travelling and so on. So Ryanair and CHR, Paddy Power have been badly affected. But if we take a look, and this video is just about having a look at how you should react or what you should do, or should you take it on the chin? Is this par for the course? Should you be frightened? Should you sell off? Should you sit tight? Should you get stuck in on Monday or Tuesday next week and take advantage of what might be opportunistic prices? Let's just take a look though first at the actual what's happened and the context. So you'll see there on Friday more than 5 billion was wiped off the value of 3 Irish companies over the new COVID strain. And if you'll see there also, stocks tumbled around the world on Friday after countries moved to impose new travel curbs to halt the spread of a new South African COVID strain, etc., etc. You'll see the Irish Stock Exchange ISAG index, which tracks all shares, retreated and fell by 4.4% on Friday. So if you had shares in Ryanair or CRH or Delata, those companies, then you saw a significant fall in the value of your shares. And I personally did as well. I saw that significant drop in my shareholding or the value of the shareholding on Friday. But I'm not spooked and I'm not panicked. And I'll tell you why if you stick with me long enough. 4.4%, 4.8%, the Irish Stock Exchange fell. Ryanair lost more than 2 billion of its value. I have shares in them, Ryanair, they fell by more than 12%. The building materials giant CRH also had a significant fall by 4%. Paddy Power, I have no shares in them. I have shares in Delata, it fell, don't have bank shares. If we go on then to have a look at what happened in Europe and the UK and the rest of the world, in European stock markets fell from 3 to 5%. Wall Street slid 2.3%, while the Nasdaq dropped 2.2%. So you'll see that there's significant falls there, and the reaction, the temptation might be to panic and to sell off or to get out or to say that this stock buying shares, etc., is a loser's game and it's ridiculous and how could you depend on it at all. But what I want you to have a look at now is this. So this is the Europe 50, and if you look at the trend, you'll see the 1 day fall is reflected here. You'll see the 1 week fall is reflected with this fall off here on this graph. And you'll see that 1 week fall, it looks like the prices on the European 50 or Europe 50 exchange fell off a cliff. If you go to 1 month then as well, you'll see that they appear to have fallen off a cliff on Friday. If you go to 3 months, you'll see that they appear to have fallen off a cliff on Friday. If you go to 6 months, that appears to be the situation. If you go to a year, however, just look at the yearly situation. You bought back here in January, and now you're up here. So notwithstanding the fall off there on Friday, you're well ahead of the game. If you look at the 3 year, you see that you're well ahead of the game. If you look at the 5 year scenario, you'll see you're well ahead of the game. If you take a look at the USA 500 and go to the 1 day, you'll see fall off there reflected in the drop in the US shares. If you take the weekly figures, you'll see the drop off there. It's fairly stark and it's fairly obvious. If you go to the 1 month, it's obvious. If you go to the 3 month, you'll see a drop off there, even though at the beginning of that 3 month period, you're still ahead of the game, as it were, because you got in lower. If you look at the 6 months though, here we see the trend that happens, you'll see happening over time. So 6 months ago you bought here, and now they're here. So notwithstanding the fall on Friday, you're still well ahead of the game. You're still showing very positive returns. If you look at the yearly situation, you'll see the trend. So notwithstanding the fall that we had on Friday that might have you running for the smelling salts or a bottle of whiskey or whatever, you're well ahead of the game over a 1 year cycle. And if you look at the 3 year situation, you're ahead of the game again. And if you look at the 5 year situation, you're ahead of the game again. You can do that, quite frankly, with any of these indexes virtually. Again, go back to the 1 day. There's the fall there. There's the beginning of the day. This is Germany. Here's the massive fall. You can see over a month. You can see it reflected there. 3 months, you can see it reflected. 6 months, you can see it reflected. But go to the yearly picture and you'll see that you're ahead of the game again, notwithstanding the fall on Friday. Go to the 3 year view, go to the 5 year view, and you'll see that you're still ahead of the game. So the purpose of this video is just to have a look at what you might do in terms of how you might respond. And shares are not for everybody. You must, if you are going to invest in shares, be prepared for setbacks. Be prepared for corrections. But these corrections, these setbacks will occur over a relatively short period of time normally. But what you must do, in my view, and what I do, is I invest for the medium to long term. So the fact that I had a significant fall in the value of my shares on Friday doesn't really make a huge amount of difference to me, because I'm not going to sell the shares on Monday. The shares are my shares. I still own them, and the companies involved, they're still going to make profits, or they're going to do their business. They're going to sell airline tickets. They're going to do whatever they do. And in 3 months' time, in 6 months' time, in 9 months' time, in 12 months' time, in 3 years' time, this will, in my view, appear to be a blip, like the other blips that we've seen there over the trends. But I think over the trends over a period of time. But I think you do need to look at the trends over a period of time before you make any snap decisions. And if you are day trading, or if you're buying shares and looking to flip them quick, if you're buying shares like a day trader and hoping to turn them over quickly for a quick profit, you're wasting your time. You're going to have terrible days like Friday, and you're not going to know what you're going to do. If you buy shares and hold them as investments for a medium to long term, you'll do well. And you've seen the trends over a period of time on various indices, and that would be my view. So even though, as I say, I took a big hit on Friday, come Christmas time, come January, I can guarantee you I'll have recovered, my shares will have recovered, and hopefully it'll be onwards and upwards. Hope you find this video useful. If you do, I'd appreciate if you give it the thumbs up down below. Thanks a lot.